Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, December 30th, 2021, about 7:15 at night. First off, I want to wish you all a Happy New Year. I'm not going to be working tomorrow. I'll be around running my company, but I'm not putting out trade recommendations or tomorrow any videos, be it in the morning flash, my subscriber videos. I'll do them over the weekend, taking a day for me. And why? Because all you do is get in trouble on a day like tomorrow. It's the last day of the year. You're trying to make sense of something that you can't make sense of. I don't know why people are going to, how and why they're going to position themselves in a certain way. We know that the event of the day was probably presidents, plural, Putin and Biden talking, setting up a series of meetings now that are going to happen. I think the first one's around the 12th. What was said, we're not going to really find out. They're both going to walk out and say, oh, there was ground for understanding. And I would expect that. But the meetings will say how much ground is there for understanding what's going to happen. We know the game, and we should understand that President Putin doesn't want, just the way America didn't want on the Cuban crisis, he doesn't want on the Ukraine missiles that can hit Russia. And he doesn't want to find that in the Ukraine, which goes against their sovereignty, by the way, that they can join NATO. Okay. Does that mean it will happen his way or not? Well, if those are the problems, maybe there's a solution. You never know. One of the solutions could be invasion on his part. There's no way the Ukrainian army can stand up to him, but they can do what you saw in Iraq and other countries, be it Afghanistan. Guerrilla armies are very powerful, and they have a big one, and they're training to be a guerrilla army. Be careful. Get what you want. It's not open battlefield. What good are the tanks when there's nobody to fire at? Okay, so now we talk about what are the markets. All right, so we've got to figure out that the markets are just in an evening up status right now, and we've had big runs up, especially in stock market. We had like 7 days in a row. You start giving back some of that. Some of the pros just say, okay, I'm closing my books down. You're still up, if you look at the weekly chart, nearly a percentage point at all-time high territory. You've got a distribution pattern that has developed in the stock market. If you step back from this and just go here, day after day, you were making higher highs. You see that. Now what the market's finally doing is getting a bit of distribution. When you put onto that the swing line, you're not trending. You have a pattern of a higher high and a lower low. You have the bias up since you're over the 18-week average, and that's over the both the 100 and the 200 week. The market has fought and got up to the Bollinger Band top, and if you've taken the course, our Bollinger Band course is out there for you to take a look at. It's under our website, iraepstein.com, under education. Go get your master's degree in how to use Bollinger Bands and tie it together with this, with momentum. You got an education coming. So are we going to embed here? Well, if you stay up on Friday, I'm not going to be here. That would be some day of embedding. I don't know if it's the third day or not. Let's take a look together. That would be Friday. Both numbers were over 80. The day before, they were both over 80. And the day before, they were over 80. It would embed. That would set up, in my opinion, that on a pullback on Tuesday morning, when the markets reopen for real, they'll open Sunday night, you know that. I mean, they'll really open Monday night, but be careful. But on Tuesday, I would think that would set up a buy. If you lose the red line under 79, say goodbye to that trade. That's how I'm viewing what could happen there. In the NASDAQ, that is not the situation. You are playing overbought. You hit the upper Bollinger Band here, and that's where I think the smart money finally said goodbye. And it was another one of these vertical price rides. Every day was a higher high right into it. What you really did is you went from the lower Bollinger Band to the upper, and if you've learned anything from me, that's where the game generally ends. And that's what's been going on here, a bit of distribution to the downside. In the Dow, you could argue you went from the Bollinger Band there to this one, but I was more interested in this break to that break. It's the same thing, though. You went up every single day with a higher high over the past nearly 2 weeks. You culminated yesterday, and today you're starting to let go. Is Is it got the capability of embedding, though, tomorrow if it stays strong? Well, if it stays strong tomorrow, both numbers would be over 80. The day before on Thursday, they were over 80. And on Wednesday, they were over 80. In fact, they were over 80 the day before. They're already embedded. So on pullbacks, I get very interested in that. I'll wait, though, and I'm telling you, I'm going to wait for Tuesday to make decisions, or Monday night when I put out some updates. I'll be looking at it real hard to see on a pullback, is the market still a buy potential? I think I nailed for you the Russell. I told you it was coming up. It was going to have very serious resistance right here at the 100, the 200, and the upper Bollinger Band. Thank you, Ira. Thank you. You can write me. Did you a nice service there. In the VIX, coming down, I say if you get down to the lower band here in the cash market, you got to be careful. I think the pros will be writing puts to get back up here, but I don't think it's going down there. I wouldn't be surprised if you rally into that little bit of a resistance zone. Then in the bonds and the notes, what are we doing here? Are we starting to embed and say, maybe we start off the year with a very slow grind of higher rates? Well, both numbers are under 20. That's what you need, part of it. Both numbers are on Thursday under 20. On the day before, they were under 20, not the day before. So tomorrow's the key. Close with that like that, and you get the bearish scenario where you're then trying to sell the rallies back in the market until the red line closes back over 21. It's fairly simple. You know, I love when things get simple. In the 10-year note, not the same game. So different parts of the curve yield are doing different things. If you'll recall, yesterday, I said, not today, I told my clients to be out, not on today. This is today's action. I said on here, I said, don't play for the Bollinger Band. Just get out. The pros are gone. They're not going to let these things always fall down there. I feel pretty good. The market has rallied back, and my traders went to a cash position. And luckily, that was a nice ending trade for the year. I don't have all winners. I lost the dollar index the day before. So if you think it's all pleasant, it isn't. But if you control risk, that's what the game is. The game is not, well, I'll wait for the market to come back. It doesn't have to come back. I got 52 years of doing this. I have seen markets never come back at times. You don't want to be that guy. You want to be the guy, my plan didn't work, I'm out. And learn to ignore it. The market doesn't hate you, and when you're right, it doesn't love you. It's a vehicle you're putting money at work in, and not every trade can work. If you think it's so, don't trade. You're not going to be that fellow that has that record. In the dollar index, you have a higher high and lower low, but I'm more concerned with this day. You ended the whole move. You got down to the Bollinger Band in an oversold condition. Why are you hanging around? And this was the trade I actually lost in. I thought when the market got up and over this, it was going to come up there. No, but my stop was here. And when it cleared it, so be it. I'm wrong. Okay. I'm like Swiss cheese. I've been wrong so often that there's wires holding me together. But I'm still here, right? So I'm doing something right as well. In the eurocurrency, you had the big up day from that. So I think to the up you ended. And now you pull back. So end of the year nonsense going sideways here. Can't always make something out of nothing. British pound, as strong as it is right now, serious resistance at the 100-day average. So between this number and the 100, at any point I'm looking for a pullback. We started with, where did the numbers start getting over 80? Right here on Wednesday. On Thursday, they stayed that way. Could you embed? Yes. So if you embed tomorrow, then I'll have a game plan that I'll be putting out for my traders Monday night to how to try to take advantage of that. You won't see it. You're not a paid subscriber. They'll see it. In the Bitcoin era, you have a higher high, lower low. I think against today's low, a lot of the pros were coming out of the market. But it's given back a chunk in the November, December timeframe. This was a $70,000 number. You're now at a $47,245. You have to have real guts to be in this kind of market. I mean, that's one heck of a move. And by the way, the trend turned on. You made lower highs, lower lows, and you just started at work. You even got yourself a mini embedded situation, but we'll talk about that another time. One of you out there, I forgot who, I want to thank you so much. You wrote that on the differential between the Brent and the WTI crude, and you know I wrote and thanked you on YouTube. You said I was dividing one by the other. I didn't realize I had put in the wrong digit. Boy, are you right. Completely right on that. And it was just not a math, but I hit the wrong symbol. This is the differential. The spread's coming together. It didn't matter because I don't trade with this. This just shows me the momentum of the market. This is what I would have really cared about. And I've been right on this. You have an embedded reading. Pullbacks are still opportunities where the trade is probably buying. But January 4th, I think it is, we have an OPEC meeting. Markets, it's been going up. It's not a sure thing what OPEC's going to do here. Market's probably taking some money off the table. Same here. Embedded readings. You're going to have plays in these. These are really interesting markets now in the energies. And I think if you're a serious trader, you want to look at that. You want to get your butt handed to you? Trade natural gas. I warned you about this. I said this thing was starting to form. It was right here. I said, watch out. You're starting to get where it's just starting to wrap its arm around price. You tell me it went from the upper band to the lower band. Guys are getting killed in this, trying to predict they're going down, going up. You don't do that. You walk away. There's weathermen, these guys are saying, well, you see that cold front moving in. That market can't go down today. It knows that they're going to get sub-zero weather in place. Chicago's going down to highs near zero. It is. We're going to get 4 to 8 inches of snow, 428, not 48, 428 Saturday. That's our first big snow with really cold weather coming in. Okay, that weather moves east. You do know that. You know, it takes a track and it can go up north too, but it's not going south. It's going to go one of those directions. Market knew it, still came down. So you don't want to be a wise guy with that. What you want to learn to do is this year, wake up in the morning, get my videos. It's that simple. If you're a true chartist and you're looking for somebody that I hope if you're watching this, I'm assuming you're watching it because you respect me. If you're watching it because I'm a joke, that's even better. Okay? I don't care what you think. I know what I think. And the simple fact is, if you watch this in the morning and you see between the overnight action, the reports coming up, and then I walk you through the daily charts and at times the weekly with it, I'm going to lay out some ideas for you. They may be the trigger you need. The cost of this is a joke. It is really inexpensive. At the end of the day, I'd love for you to trade through us. That's what it's about. It's not about me building my research in the end, but it is. I want that income from it. But it's inexpensive. $15 a month after your introductory price of $7.95. Come on. And it's not per month. It's per 30 days. It doesn't matter when you start. Each video, approximately 18 minutes long. You're going to get 24 of them on average a month, 5 of them during the week for daily charts primarily, and then one on the weekend devoted to the weekly charts for the longer term charts. Give it a try. You have the money, $7.95. Go to the website. Under the word research, all my programs are there. You have a great new year, folks. You won't see me tomorrow. You'll see me over the weekend doing the small week stuff that I do here. And of course, my subscribers, you'll get your normal products over the weekend. Take care.